Welcome back, Wealth Explorers. Today, we're diving into the world's most powerful asset, gold, specifically the massive reserves held by nations. These aren't just shiny bars, they're shields against economic chaos and symbols of global power. Imagine tons of gold stacked in high-security vaults, quietly influencing the value of your money and the stability of the global economy. In this video, we'll reveal the top 4 gold-holding countries, the latest data for 2025, and why these reserves matter more than ever. We'll break down who has what, where it's kept, and the strategies behind these legendary hoards. If you're curious about the real levers of financial power, you're in the right place. So grab a coffee and let's strike gold. Let's start with the undisputed heavyweight in the world of gold reserves, the United States of America. The U.S. holds over 8,133 metric tons of gold, by far the largest stash on the planet. To put that in perspective, that's more than double the reserves of the next closest country, and it accounts for nearly a quarter of all the gold ever mined in human history. Imagine row upon row of gleaming gold bars, each one a silent testament to America's economic might. Most people immediately think of Fort Knox when they picture America's gold, but the reality is even more impressive. The U.S. gold reserves are spread across several ultra-secure locations: the legendary Fort Knox in Kentucky, the West Point Mint in New York, the Denver Mint in Colorado, and deep beneath the bustling streets of Manhattan in the Federal Reserve Bank of New York's underground vault. Each site is a fortress in its own right, designed to withstand almost any threat. The New York Vault is especially unique. It doesn't just hold American gold, it's also the world's ultimate gold parking garage, safeguarding gold for dozens of foreign governments and central banks. Here, gold bars from around the globe rest side by side, a silent symbol of international trust in American security. Why does the U.S. have so much gold? The answer lies in history. After World War II, the U.S. emerged as the world's dominant economic power. At the 1944 Bretton Woods Conference, the dollar was pegged to gold, and other currencies were pegged to the dollar, making it the world's reserve currency. This system required the U.S. to hold vast gold reserves to back its currency and inspire global confidence. Even after President Nixon took the U.S. off the gold standard in 1971, the country held on to its massive hoard. Today, that gold is more than just a relic. It's a symbol of enduring strength and a financial backstop for the dollar in times of crisis. It reassures both Americans and the world that the U.S. dollar is built on a foundation of real, tangible value. Gold still makes up about 70–75% of U.S. foreign reserves, a much higher share than most countries, which often hold more of their reserves in foreign currencies or government bonds. This heavy reliance on gold sets the U.S. apart and underscores its commitment to financial stability. The U.S. rarely buys or sells gold. Its massive stockpile is a statement of stability and power. For decades, the gold has remained untouched, watched over by armed guards and layers of security systems. It's a silent guardian, always ready but rarely called upon. With gold prices projected to hit $3,400 per ounce in 2025, America's stash is worth trillions of dollars, enough to dwarf even the fortunes of the world's richest billionaires. This immense value gives the U.S. a unique kind of financial insurance, a buffer against economic shocks and global uncertainty. The vaults themselves are engineering marvels, with security so tight it's inspired countless heist movies, legends, and conspiracy theories. From massive steel doors to motion sensors and armed patrols, every detail is designed to keep the gold safe from any imaginable threat. But at its core, this gold is more than just a collection of shiny metal. It's a silent anchor for the U.S. economy, a foundation of trust that underpins the dollar and gives America outsized influence in global finance. When nations and investors look for safety, they look to the U.S., and its gold is a big reason why. Any move by the U.S., whether buying or selling even a fraction of its reserves, would send shockwaves through the global gold market. The world watches America's gold, knowing that its decisions can sway prices and shape economies. In a world increasingly dominated by digital money, cryptocurrencies, and economic uncertainty, America's gold remains the ultimate rainy day fund. It's a safety net that has stood the test of time, ready to be called upon if the world ever faces another financial storm. It's not just metal, it's the bedrock of American financial power, a symbol of trust, stability, and enduring strength that continues to shape the world economy. Next, let's head to Germany, home to the world's second largest gold reserve. about 3,352 metric tons. After World War II, gold was crucial in rebuilding Germany's economy and restoring trust in its currency. Most of Germany's gold was accumulated during the 1950s and 60s thanks to booming exports and trade surpluses. For decades, much of it was stored abroad, in New York, London, and Paris, as a Cold War precaution. But starting in 2013, Germany began bringing its gold home, completing a massive repatriation by 2017. Now, about half is in Frankfurt, with the rest still in New York and London for strategic flexibility. This move reassured the public and signaled confidence in Germany's stability and the Eurozone. Germany's gold is a psychological anchor for the euro, providing trust and a backstop in times of crisis. The Bundesbank sees gold as a long-term store of value and a hedge against inflation, not something to be traded. At 2025 prices, Germany's gold is worth hundreds of billions, a testament to economic prudence and stability. The story of Germany's gold is one of recovery, responsibility, and strategic foresight. It's a quiet giant, anchoring both Germany and the Eurozone. More than metal, it's a symbol of resilience and trust. Now, let's take a closer look at Italy, a country renowned for its rich history and cultural treasures, but also for being the world's third-largest gold holder. Italy's reserves stand at an impressive 2,452 metric tons, a figure that places it just behind the United States and Germany in the global rankings. Despite facing persistent challenges like high public debt, slow economic growth, and frequent political drama, Italy's gold reserves serve as a crucial economic buffer. This ancient asset provides a sense of modern stability, acting as a financial shield in times of uncertainty and market turbulence. The Banca d'Italia, Italy's central bank, stores the majority of this gold in highly secure vaults in Rome. The rest is strategically held in international financial hubs like New York, London, and Bern, ensuring Italy has access to global liquidity and can respond quickly to international financial needs. This gold is not just a national treasure, it is state property, managed with utmost care by the central bank. Italian law fiercely protects these reserves, making it extremely difficult for any government to sell them off, even in times of fiscal crisis. Selling gold would be seen as a sign of weakness, potentially spooking both domestic and international markets. That's why Italy's gold remains largely untouched, a silent but powerful guarantor of the country's financial credibility and resilience. At current market prices, Italy's gold is worth hundreds of billions of euros, representing a significant portion of the nation's wealth. This reserve is not just a number on a balance sheet, it's a tangible asset that underpins Italy's financial system. Most of these reserves were accumulated during the post-war economic boom, a period when Italy rebuilt itself from the ashes of World War II. This gold has provided a lasting cushion, helping the country weather economic storms for generations. The central bank views gold as a strategic asset, a hedge against inflation, currency crises, and global shocks. It's also a symbol of national autonomy, giving Italy a degree of independence within the Eurozone. Italians have a deep cultural connection to gold, stretching back to the days of the Roman Empire. This historical bond helps explain the strong public support for maintaining and protecting these reserves, seeing gold as both a legacy and a safeguard. In a volatile global economy, gold acts as Italy's anchor, quiet, steadfast, and essential for the stability of both the country and the wider Eurozone. It's a foundation that supports confidence in Italy's financial future. For investors and citizens alike, Italy's gold reserves offer reassurance. No matter what storms may come, Italy has a solid, time-tested asset to fall back on, strengthening trust in its economic resilience. In the end, gold remains Italy's ancient ally in a rapidly changing modern world, a symbol of enduring strength, stability, and national pride. Now let's talk about China, the rising power shaking up the gold market. In recent years, China has emerged as a central player in the global financial landscape, and its approach to gold is a key part of its strategy. While many countries have slowed their gold purchases, China has quietly accelerated its accumulation, signaling a shift in priorities and ambitions on the world stage. Officially, China holds about 2,264 metric tons of gold, making it one of the largest official holders in the world. But the real story might be even bigger. Many experts and analysts believe the true number is much higher, thanks to secretive state entities and off-the-books purchases that aren't reported to international organizations. This hidden hoard could be quietly fueling China's rise. China's gold strategy is all about boosting the yuan's credibility and reducing reliance on the US dollar, a long-term play for global influence. By increasing its gold reserves, China is working to position the yuan as a stable, trustworthy currency that could one day rival the dollar in international trade and finance. This is a calculated move to give China more control over its economic destiny. As both the world's top gold producer and a massive buyer, China wields huge influence over the market. Its domestic gold mining industry is the largest on the planet, and the government encourages both state and private entities to keep buying. This dual role as producer and consumer gives China unique leverage in setting prices and shaping global trends. The People's Bank of China buys gold quietly, then updates its official numbers in big jumps, keeping the world guessing. This pattern of sudden, large increases in reported reserves is a deliberate tactic, designed to maximize strategic surprise and minimize market disruption. It also keeps competitors and rivals in the dark about China's true intentions. Gold helps China diversify its reserves, hedge against US sanctions, and protect against currency risks. In a world where economic sanctions and financial warfare are increasingly common, gold offers a form of security that can't be frozen or devalued by foreign powers. It's a shield against uncertainty and a tool for asserting independence. Some analysts think China's true gold stash could rival Europe's, but the lack of transparency is part of its strategy. By keeping the world guessing, China maintains flexibility in negotiations and can respond quickly to changing global conditions. This secrecy is not just about hiding assets, it's about maintaining an edge in a high-stakes game. China is also building the Shanghai Gold Exchange to challenge Western dominance in gold pricing and promote the yuan in global trade. By creating its own gold trading hub, China is setting the stage for a new era where Asian markets play a bigger role in determining the value of gold and, by extension, the value of money itself. For Beijing, gold isn't just about wealth, it's about power, security, and reshaping the global financial order. Every bar of gold in China's vaults is a statement of intent, a signal that the country is preparing for a future where it calls more of the shots in international finance. Chinese citizens also love gold, fueling strong retail demand and reinforcing gold's role as a safe haven. From wedding gifts to family savings, gold is deeply woven into Chinese culture. This widespread public enthusiasm for gold supports the government's strategy and creates a powerful, united front in the quest for financial security. If the yuan, backed by gold, gains ground as a reserve currency, it could shift the balance of global finance. The world could see a future where the dollar is no longer the only game in town, and countries have real alternatives for trade and savings. This would mark a dramatic change in the way the global economy operates. China's gold accumulation is a patient, strategic move, one that could redefine the rules of the game. It's not about quick wins, but about building a foundation for long-term power and influence. Every gold bar added to China's reserves is a step toward a new global order. The secrecy only adds to the intrigue, giving China flexibility and leverage. By keeping its cards close to the chest, China can adapt its strategy as needed, responding to global events and opportunities as they arise. This unpredictability keeps rivals on edge and gives China a unique advantage. In a world of uncertainty, China's golden hoard is a clear signal. They're playing for keeps. As global tensions rise and the future of money is debated, China's gold reserves stand as a powerful reminder. The next chapter in global finance may be written in gold, and China is determined to hold the pen. So, why does all this matter? Gold reserves aren't just about wealth, they're about power, stability, and trust. With prices soaring and central banks buying more than ever, gold is back in the spotlight as the ultimate safe haven. Countries like Poland and India are joining the gold rush, signaling a global shift away from traditional reserve currencies. This isn't just a trend, it's a strategic move to diversify and protect against uncertainty. Central bank demand could keep pushing prices higher, which matters for investors everywhere. Should nations keep stockpiling gold, or is it time for a new strategy in the digital age? Let me know in the comments. Don't forget to like, subscribe, and hit the bell for more deep dives into wealth and power. See you next time.